In about 10 minutes, I'm going to explain to you the essence of Stan Weinstein's strategy. So we're going to be doing that here on TradingView. I've laid out a chart which we are going to analyze as a weekly chart. I'll be talking about the main concepts from my interpretation of Stan Weinstein's work. Then we'll be drilling down into some of the nuances as this video plays out. So Stan Weinstein's strategy explained. So the key points there are four stages. There is a stage 1 accumulation, there is a stage 2 uptrend, there's a stage 3 distributional top, and a stage 4 markdown. So Stan said in his book that investors should do about 80% of their buying from stage 1 accumulation based breakouts, whereas traders should do the opposite in terms of 80% of their buying should be from stage 2 continuation type patterns. So that's quite commonly going to be flags, Darvis boxes, VCPs, cup and handles, so on and so forth. He uses buy stop limit orders to enter his trades. I'll be talking about that. You can see we can see we've got one set up down here for a stage 1 breakout with a $100 pivot point and then $95 stop loss, so 5% risk. I'll be talking about how to actually enter your trade. Sell during the stage 3 top at either undercuts of prior lows or break down through the 30-week moving averages, which is going to be this orange line here. So we'll be talking about some sell rules over here a little bit later on in the video, and do not buy in stage 4 downtrends. Okay, these stage 4 downtrends. So let's start talking about it piece by piece. So the stock has been in the context of a downtrend here, and then it starts to base out like this. Now, there's a couple of other nuances which I don't want to make this video kind of an hour long and go into all of the kind of nuances, but ideally around this buy point here, you would like to see the relative strength turning up of the group. You'd like to see the whether it be an ETF or a group chart, if you're using TC2000 or MarketSmith or something like that, or an ETF of the group, you'd like to see it showing signs of strength as well, building out a pivot point, building out a nice looking base. You can actually see, albeit this is a stage 1 accumulation base with a spring down here, which chart pattern do you see? See this cup and handle forming here? If I make that purple or something, or kind of pink, you see this? See how this is standing out now, cup and handle type pattern. So you'd like to see the brother sister stocks, the group acting well, as well as this base is forming over here. So there are kind of a couple nuances already. No doubt there'll be some others as this video goes on. So we see the stocks in this stage 4 downtrend bounces. Now, oftentimes this bounce will be very large. It'll be the largest bounce you see in this subsequent downtrend. It may be the stock goes up 50%, 100%. It could be very very climactic as well. A lot of volume coming through. It then comes back down, test the low of this base. So now we have a trading range developing between $100 and $80 as well. So we put in this spring. We then spring up, the stock gets back above its 30-week moving average, so this orange line here, and then you can start to see a bit of VCP action. So as much as we were just talking, I'll leave this on this time, as much as we were then talking about this cup and handle, we have a bit of VCP, excuse my cough, a bit of VCP action going on here. Price volatility contracting, you'd like to see the volume drying up, it's above the 30-week moving average, and then we could look for a breakout. Okay, as price starts to dry up, tight candlesticks, you'd like to see the volume drying up, and we have a pivot point of around about $100. So the next thing to think about is how do we control risk? So the logical place for our stop loss could be underneath this second to last contraction, which ties in with being underneath the 30-week moving average. And for the purpose of this, let's imagine that's $95. So if we're buying at 100, we're going to talk about the order in a second. If we're buying at 100, our stop loss is then going to be placed at $95. You may just do it underneath, just under the whole dollar number. So maybe $94, 93, $94.97, something like that, just underneath 95. That's just a little thing that I've noticed. The market tends to move to round numbers, so where possible be just below them. So we're going to have 5% risk on the trade. So in terms of your order, I appreciate many of you who are watching this video, you may have jobs, you may have other commitments, you may be spending time with family, be out on the golf course or whatever, so you can't be drawing in terms of when the stock is breaking out. You can't actually be physically there staring at a screen and then placing your order with your broker. So how do we overcome that? Well, you can use what Weinstein uses, Darvis used them as well, where he was gallivanting around the world dancing, a buy stop limit order where you can attach a stop loss as well. So we would have a buy stop at $100. We can then attach a maximum that we're willing to pay. So you may do $100.50. So you want to be the maximum you want to be filled is within 50 cents of the pivot point, and then you can attach your stop loss at $95 or $94.97, something like that. So if price moves through this level, you're going to be filled, assuming price is still within your limit of your buy stop order, and then your stop loss will be automatically placed here at $95, whatever it might be, right? So Stan Weinstein there, and I'm going to talk about adding here just to kind of just to add kind of the overall complexity of this video, and hopefully make it a little bit more interesting for both investors looking for stage 1 accumulation breakouts, but also for traders, which is probably the majority of you, from the stage 2 uptrend continuation type pattern. So let's imagine the stock starts breaking out here. Now it goes on a pretty decent move in terms of the percentage here. The stock goes up around about 40, let's call that 40% ish. Let's make the numbers nice and round. 40%, and then we can see that it pulls back down from peak to trough of this base only around about 6-7%. So this is obviously a fairly strong stock. We'd like to see the group acting well, so on and so forth. And then we put in these 3 contractions. We have 1 contraction, 2 contraction, 3 contraction. So a nice bit of VCP action. Potentially the volume is drying up. The relative strength line is very strong as well. And we start to see that this third and final contraction, price is actually sitting there on the 30-week moving average. Now, we have a choice here. We could place our stop loss underneath this middle contraction, so the second to last contraction. That would be around about 4% risk. Or you could go even tighter and go, I'm going to be underneath that final contraction, underneath the 30-week moving average, which may be, in this instance, a couple of percent. I think anywhere, if you're swing trading breakouts on the weekly chart, your stop loss anywhere between 3% and 7%, I think is very, very acceptable. So let's imagine that we then add to this stage 2 breakout from this VCP. Okay, so we're not very concentrated in this stock, but imagine if you put, say, 15% of your account in the stock here, and then you see this subsequent area that you could add. Maybe you put another 5% of your account, or 10% of your account. So maybe your overall account, you have 20% to 25% here on this add point. Now, the stock continues to go up, and then a common thing that you're going to see, if I just make this kind of I'll make this area amber. Okay, so a common thing you're going to see from a transition from this stage 2 uptrend into a stage 3 top, which is a stage 3 distributional top, really, is you're going to see some climactic action, both in terms of the price and also the volume as well. I've tried to illustrate that by this kind of more climactic action. So you could see some very kind of erratic price behavior. You could see some very large volume spikes. And if you think logically about that, and you kind of have to be cynical about this as well, right? The large operators in the market are accumulating on the way down here in terms of this prior stage 4 decline. In the stage 1 accumulation base, institutional trend followers will then be jumping on this as it starts breaking out from stage 1 into stage 2. So they're obviously loaded in terms of their position. So they're looking for an opportunity to offload their positions. So it isn't uncommon to see on these phase 3 distributional tops, there's actually a lot of good news coming out in terms of the company. You may actually find here that you're having the best earnings and the best sales coming out. The stock's being talked about on CNBC or whatever like that. So a lot of retail traders, it's then coming up on their radar. It's being spoken in financial media. So as large operators are distributing, it's retail traders on the other side that are buying that, providing the liquidity for the large operators to be exiting their position. So that's just something to be looking out for if the stock has gone on a significant run, which I tried to work it out here. So the stock is roughly double from $100 to a couple $100. So the stock's made a big move here. Then the erratic price behavior starts coming through. You may see a large increase in relative volume. I use the 30-day average volume, or 30-week average volume if I'm on the weekly chart. So you may see a large increase there. So for Stan Weinstein, in terms of his exit rules, there are a couple. One thing to look out for is when the 30-week moving average, so this orange line here, starts flattening out. So you could be looking to sell when price breaches through that 30-week MA, and or in this phase 3 distributional top, using lows of the base. So you see this contraction here, we could be using the low of this. So if price moves through there, we could be using the low of that as an exit, or potentially there's this higher one in here as well. Now for me, and kind of my interpretation of it as well, I don't think you would have to necessarily do all or nothing. It may be, especially if you've got a very large gain on the trade like this, you may go, well, I'm going to place a stop loss here for half of my position, and then another half here. Again, it's kind of analyzing the chart, applying some common sense, trying to think prudently as well. Because remember, if this suddenly turns around and sets back up over here like this, and it starts getting really tight, you could always then look to add back to your position and or initiate a new position. Okay, if it kind of then tightened up over here, you can always look to add back. But in terms of the sell rules, it would either be a breach of the 30-week moving average and or on undercuts of lows in the developing base. Okay, so that is something to be thinking about. So hopefully, guys, that video there was around about 10 minutes long, explaining my interpretation of Stan Weinstein's stage analysis strategy. Hopefully that